everybody, welcome back to my YouTube channel. My name is Rishabh and this is our revision lecture number 10 of entire MCQ Oriented fast track batch of CA Final SPOM, that is Corporate and Economic Law Set A. In this video, we are going to cover your chapter number 8, that is Miscellaneous Provisions, which includes your Nidhi Company provisions, provisions related to the Dormant Company, provisions with respect to the Dormant Company, registered valuer, and lastly the removal of the company. So this chapter, if this chapter is asked in the examination, this would be asked for a minimum of 6 to 10 marks. In my examination, this chapter was asked for 12 marks in my examination. And let me tell you, Nidhi Company, Dormant Company, and some of the provisions of the registered valuer are very important from your exam perspective. And therefore, now without wasting much of time, let us begin. Now, before beginning this chapter, let me tell you, this entire PDF you can get into the Telegram channel, the link of which is given into the description. Please do join that channel so that you will be updated with respect to all the lectures which I will be uploading into the next couple of days. Now, let us start firstly with the Nidhi Company provisions. Now, as you can see on the screen, Nidhi Company. So, a company which is incorporated with the object of developing habits of theft and reservation of funds among the members. That means couple of members are coming together to form a company wherein they will be there will be kind of development of habit of theft, and the fund will be reserved there for the use of the utilization of the members. That is the main purpose of the Nidhi Company. The point number 2 talks about central government shall, upon receiving application in form NDH4 and fees from the public company, declare a company as a Nidhi Company. That means only a public company can become a Nidhi Company. So this is very important provision. Can any kind of company become a Nidhi Company? So the answer to the question is no. Only a public company can become Nidhi Company, and the application is to be submitted in form number NDH4. Let me tell you, this entire PDF, these entire notes are completely based upon MCQs and therefore might not include the full provisions. Therefore, please refer to the ICE module as well if you need. Otherwise, I will show you the comments wherein the people are saying these notes are more than enough to clear your SPOM examination. So please be very confident with this PDF. If you need to have a better understanding of the provisions, then you should refer to ICE module. Otherwise, no need to refer ICE module. Now, point number 3 talks about application under point number 2. Over here, application, whatever you are filing, it is to be filed by the company within 1 year from the date of incorporation or any extra time that is allowed by the regional director. Means any public company which is incorporated, then the company can file an application to obtain a status of Nidhi Company within 1 year from the date of incorporation or any other additional time which is granted by the regional director. If form NDS is not filed, then it cannot file SS7, that is notice to the registrar for the alteration of share capital, and form number pass 3, that is a return of allotment form that is filed with the registrar. So these forms cannot be filed if you have not filed form number NDH4. That means NDS form is a very important form. Now, point number 5 talks about the important provisions with respect to Nidhi. So, Nidhi Company shall be a public company and minimum paid up share capital of how much? 10 lakh rupees. Nidhi Company cannot issue preference shares. Every Nidhi shall have the last word as Nidhi Limited. That means any company name, any Nidhi Company should have the letters as Nidhi Limited at the end of its name. So, this is a very important provision. Point number D talks about every Nidhi shall within a period of 1 year from the date of incorporation shall ensure that it has not less than 200 members. That means every Nidhi Company which has been incorporated and a period of 1 year, it should ensure that it should have minimum of 200 members, net on funds of 10 lakh rupees or more. Matlab minimum 10 lakh rupees of net on fund should be there. So with respect to this point, there are a lot of doubts. So let me tell you, this requirement applies to minimum maintenance of net on fund requirement applies to in case a company has to comply with this requirement within 1 year from the date of incorporation. That means within 1 year from the date of incorporation, any Nidhi Company shall have net on fund of 10 lakh rupees or more. But a company shall maintain net on fund of 20 lakh rupees or more. That we are going to understand in the next subsequent pages. So please be very careful with this point. Now, an unencumbered term deposit of not less than 10% of the outstanding deposits, and NLT stands for not less than 10% of the outstanding deposits, net on funds to deposit ratio of not more than 1:20. So these provisions are very important from the MCQ perspective. So please refer to these provisions in detail. Now, point number E talks about file form number NDH1, that is statutory compliance within 90 days from the end of financial year. That means any Nidhi Company who is registered as a Nidhi company has to file form number NDS1 within 90 days from the end of financial year. If it does not file, if a Nidhi company does not comply with the point D, that means this point as you can see here, point number D, then it shall not accept further deposit from the commencement of second financial year. मतलब first financial year के अंदर company did not comply with all these provisions. That means in the second financial year, a Nidhi company cannot accept further deposits. Chit fund, hire purchase, finance, lease financing, insurance or acquisition of any securities is completely prohibited to the Nidhi company. Very important. Again, this point number H, I, J, these subsequent points are very, very important from an exam perspective. Cannot acquire any other company by any way. Matlab, a Nidhi company cannot hold any kind of subsidiary. Open any current account with its member. That means a Nidhi company cannot open any kind of current account for its members. That is not allowed. Now, point number J talks about cannot carry on any business that is other than the borrowing or lending in its own name. Matlab, company can only carry on business of borrowing and lending that is also to be conducted in its own name only and cannot be conducted in any other name. That's all. Point number K talks about what are the prohibited activities that a Nidhi company cannot do. A Nidhi company cannot do a business of accepting deposits or lending money to any person other than its members. That means a Nidhi company can borrow and lend money only to its members. Apart from that, it cannot borrow or lend money to any other person. It cannot pledge any assets that is lodged by the member as a security. It cannot take deposit from or lend money to any other body corporate. That means it cannot borrow or it cannot take deposit or it cannot lend money to any other body corporate. It cannot enter into partnership in its borrowing or lending activities. That means its activities are to be conducted wholly only. That means there cannot be any kind of partnership with any other person. It cannot issue advertisement for soliciting deposits. That means only the members can deposit their money with the company, Nidhi company. Any other person who is willing, the company shall not make any kind of advertisement which is a kind of soliciting the other persons to deposit with their company. So those kind of activities are completely prohibited. It cannot pay any brokerage or incentive for mobilizing deposits from the members. It cannot raise loan from bank or financial institution or any other source for advancing loans to the members. So these points are very self-explanatory. If you give it a read, you will be easily able to understand. Now, with respect to the issue of advertisement, there is an exception. It can issue a private circulation to only its members. A private circulation to its members can be issued with respect to acceptance of deposits. Apart from that, any kind of other advertisement is completely prohibited to the Nidhi company. Every Nidhi shall issue fully paid up shares of nominal value of not less than 10 rupees. Allotment of each deposit holder. Minimum 10 equity shares is to be allotted, or shares that is equivalent to 100 rupees are to be allotted to each deposit holder. Now, a saving account holder and a recurring deposit account holder shall hold at least one equity share of rupees 10 each. That means one share of 10 rupees is to be held by them. Membership, body corporate or trust not allowed. Minimum 200 members at all times are required. No minor is allowed. Members shall not transfer more than 50% of holding during the subsistence of such loan or deposit. That means they cannot transfer more than 50% of their holding. So these are with respect to membership provisions. Point number 10 talks about minimum net on fund to be maintained is 20 lakh rupees or more. Here we learned that there should be minimum net on fund of 10 lakh rupees that within 1 year from the incorporation. Here a company says after 1 year from the date of incorporation, every company shall maintain minimum net on fund of how much? 20 lakh rupees or more. And therefore these provisions are kind of very confusing. So please be very careful with this provision. Now point number 11 talks about deposits shall not exceed 20 times of the net on fund as per latest audited financial statement. Point number 11 talks about this. Point number 12 with respect to deposits. FD minimum of 6 months, maximum 60 months. Recurring deposits minimum 12 months and maximum of 60 months. Maximum balance in saving deposit account at any time qualifying for interest rupees 1 lakh and ROI return on interest maximum 2% above the rate interest that is payable by the nationalized bank. This is what the maximum interest rate that can be paid. Point number D talks about interest rate for FD and recurring deposits maximum as per RBI rate, which NBFC can pay deposits on money that is accepted by on the deposits which has been accepted by the NBFCs. Now FD and RD account related provisions. FD and RD accounts shall be foreclosed by the members or depositors subject to Nidhi shall not repay any deposit within 3 months from the acceptance date. If Nidhi repays any deposit after 3 months at the request of the depositor shall not be entitled to any interest for 6 months from the date of deposit. Now, point number 3 talks about if deposits are repaid before expiry of period, the interest rate shall be reduced by 2% of the ordinary original rate. In that case or premature deposits, interest rate shall not be reduced. I think these provisions are very self-explanatory. If you give it a read, you will be easily able to understand it. Point number 13 talks about unencumbered term deposits. So with the scheduled commercial bank other than cooperative bank and the regional rural banks, post deposit which shall not be less than 10% of the outstanding deposits on the last working day of the second preceding month. मतलब previous month को छोड़िए, उससे पहले वाले month में last preceding day को it should not be more than 10% of the outstanding deposits on the last working day. Okay, it's not the last, it is the last working day. That means the last day on which the bank started, on in which the bank or the rural bank or the post office, work on the last in the month. Point number 14 talks about loan by Nidhi to members subject to following, namely, if you give it, these are the threshold. I would recommend you to please read it to your own self and you will be able to understand. Nidhi shall provide loan only to its members. It cannot provide loan to any other person, including body corporate partnership, any other person. It cannot provide any loan. Loan to members against following securities. मतलब loan can be provided against gold, silver or jewelry. Repayment period maximum will be 1 year in gold, silver and jewelry cases. Immovable property के against also loan is allowed, but maximum of 50% of the value of property plus repayment period would be maximum of 7 years. FD receipts, NSC, other government securities. NSC बोलो तो National Savings Certificates, other government securities and insurance policies. All these, against all these kind of securities, loan can be granted by the Nidhi Company to its members, but there are different repayment period. Now, rate of interest shall not exceed 7.5% above the highest rate of interest that is offered on the deposits by the Nidhi, and it is to be calculated on the reducing balance method. So this is not much of relevance. If you remember only this 7.5%, this is more than enough. Now, what are the rules relating to the directors? Director can be member of the Nidhi Company. He can hold office for 10 consecutive years. He is eligible to be appointed only upon expiry of 2 years of ceasing as director. मतलब 2 years of cooling period should be there in order to appoint any person, in order to reappoint any person as director. And director shall comply with section 152 subsection 4 and should not be disqualified under section 164. This we learned under your directors chapter number 1. Now, dividend, no dividend exceeding 25% in the financial year cannot be paid. Auditor, individual would be at maximum term of 5 years, one term of 5 years, and firm 2 terms of 5 years each, and cooling period of 2 years is there for auditors. Half yearly return in NSG 3 is to be filed within 30 days from the conclusion of each half year certified by the practicing CA or CS or CMA. मतलब 30 days के अंदर you have to file half yearly returns from the end of 6 months of the financial year. Now, penalty for non-compliance, punishable with 5,000 rupees. If it is a continuing one, then 500 rupees per day ka penalty लगेगा. So that was about your Nidhi Company related provisions. Now let us move on to the Dormant Company. Now, firstly, what is a Dormant Company? Means a company which is formed and registered under Companies Act 2013 for future projects or to hold properties for which no significant transactions are being undertaken. Again, very important definition. Any company which is incorporated to accept future deposits, to accept future projects, to undertake future projects, or to hold properties for which no significant transactions are being undertaken. Those companies are called as dormant companies. Now, such a companies or inactive companies. Now, dormant company and inactive company both are different. So, what is an inactive company? It means a company that is not carrying on any business, or there is no significant transactions during the last 2 financial years, or has not filed financial statement or audit report for or during the last 2 financial year. मतलब if these two, मतलब there is no significant transactions are being undertaken, or company has not filed financial statements or the audit report, annual report under section 97 and 137 respectively, under section 92 and 197 of the Companies Act 2013 respectively, for the 2 consecutive preceding financial years, then such a company would be considered as an inactive company. This MCQ was asked in my examination. MCQ was like, a company has not undertaken any kind of significant transactions in the last 2 years. Whether a company is a dormant company, is an inactive company, or is a Nidhi company, or one more option was there. So the correct answer was it is an inactive company. You cannot say a company is an inactive dormant company until and unless it has obtained a certificate from the registrar of companies. Now, such a company, that means a dormant company or an inactive company, can make application to the ROC for obtaining status of the dormant company. So significant transactions, here we understood the word significant transactions. So what are the significant transactions? That means significant transactions will not include these four transactions. Apart from these four transactions, if any transactions are being undertaken, then in such a case that transaction will be considered as significant transaction, and the 2 years law criteria will not be applicable. So what are those four transactions? The first one is fee payment to the ROC, payment under any other act, allotment of shares, payment to maintain register office and the records. So these are the four transactions which can be undertaken and which shall not be constituted as significant transactions. Now, application for obtaining status of dormant company. Company can mean application in the form MSC1. This MCQ was again asked in my examination. What is the form under which the application is to be submitted? It is form number MSC1. After passing special resolution or after 3/4 of the value of the shareholders' approval, an application can be filed with the registrar for obtaining the status of the dormant company. Now, which company is eligible to make application? Well, these are the companies which can only make application. There should not be any kind of inspection, inquiry or investigation being undergoing. No prosecution is pending or any kind of litigation is pending. No outstanding public deposits. Plus, there is no default in repayment of deposits along with the interest. Point number 4 talks about no outstanding loans. If unsecured loans, then application after their approval. That means after the approval of the unsecured creditors, company can obtain the status of the dormant company. No dispute of management of the ownership. No outstanding statutory dues of the central government or state government. There is no default in the workmen's payments dues. And lastly, the company's securities are unlisted. That means the company's securities are not listed on any stock exchange. ROC shall issue certificate in form number MSC2. MSC3 is to be filed by the dormant company within 30 days from the end of financial year, which should be certified by a chartered accountant. Point number 6 talks about any other company. Any company which fails to file financial statement or audit report for 2 consecutive financial years, then ROC may issue notice to such a company to enter the name of that company in the register of the dormant company. That means any company, not necessarily be any, it can be any company. If company does not file financial statement or audit report under section 137 and 92 respectively, then in such a case a company, ROC can issue a notice to any company for registering such a company as a dormant company. Now, directors in case of a dormant company. This question was asked in my examination, saying that what is the minimum number of directors in case of a public dormant company. So, in case of 1-person company, it is 1 director, private company 2 directors, and the public company 3 directors. This is same as what we learned in our chapter number 1, that is our appointment of directors. 1-person 1, private limited 2, and public limited where 3 directors are minimum required. Whether it is a dormant or other company, that is kind of not relevant. Point number 8 is, if dormant company wants the status of active company, then application to ROC in form MSC4. ROC shall issue certificate in form number MSC5. That means company shifting from dormant company to an active company. Then application is to be filed in form MSC4 and certificate will be issued by the ROC in form number MSC5. If company remains as dormant company for 5 consecutive financial years, that means a company remains dormant as 5 financial year, then ROC can initiate the process of striking of the name of the company. That means maximum 5 years a company can stay as a dormant company. Point number 10 talks about, if company does not act against those mentioned in MSC1. While submitting application under MSC1, if you are doing any activity which is in contravention to those activities mentioned in MSC1, then a director shall within 7 days of that event, of that contravention, file application to the ROC for obtaining status of the active company. Again, important provision. And ROC may issue suo motu, treat any company as active company if it fits to do so. So this was our entire revision of the dormant company. I hope you like this video. If you like this video, please share this entire video to all your friends. Please share this entire playlist to all your friends, because I am receiving a very good response from all these videos. All these notes are very useful for the people to clear in just 2-3 days of preparation. So please do share with all your friends, all your colleagues, all your article students, everybody. Please share it to them. Now, removal of name of the companies from the register of companies. Power of ROC to remove name of company from the register. ROC can remove the name of register if company fails to commence within 1 year. If company fails to commence business within 1 year from the date of incorporation, if not carrying business or operations for 2 financial years and has not obtained the status of the dormant company, in that case also ROC can remove the name of the company, can strike off the name. Subscriber to the memorandum did not pay the subscription money, plus a declaration of this act is not filed within 180 days, then from the date of incorporation, then in such a case ROC can strike off the name of the company. company not carrying on business or operation which is revealed after the physical verification which is conducted by the ROC. So these are the four circumstances under which an ROC can remove the name of the company from the register of companies. Now, before doing so, notice to the company and director of ROC's intention is to ROC's intention of doing so. A notice should be given to the company and the director, and the company and director to respond to that notice within 30 days from the date of such notice. Now, point number 2 talks about company can file application for name removal by way of passing a special resolution. Here we learn under what circumstances ROC can remove the name of the company. Here, under what circumstances a company can make an application to the ROC for the removal of the name by way of passing a special resolution to the meeting or consent of 75% or more of paid up share capital. Matlab, by way of passing a special resolution or by way of consent of 75% of the members in terms of paid up share capital, the company can file an application to the registrar for removal of the name of the company, and this provision is not applicable in case of section 8 company. Matlab, section 8 company cannot do either of these two acts. All right. Point number 3 talks about company cannot make application for name removal. Well, apart from section 8 company, these companies also are not eligible to make application for the name removal. The first one is a company which has changed its name or shifted its registered office from one state to another state, or it has made any disposal of property for gain or business purposes, or it has engaged in any activity except one which is necessary for the making of application. Any application is made for the CAA, that is compromise, amalgamation and arrangement, and is being bound up under IBC Act 2016. So under these 5 circumstances, if these 5 things has happened in the previous 3 months, then any company cannot make an application to the registrar for the name removal. If still application is made, then a fine of rupees 1 lakh is to be imposed onto the company. Effect of company notifies as dissolved. Cease to operate as company, certificate of incorporation deemed as cancelled, and no effect on realizing amount due to the company and paying debt. Fraudulent application for removal of name with the intention to deceive creditors or defraud any person, company, then such person, individual, company shall be liable joint and severally, and registrar can initiate prosecution and will be liable under section 447. Appeal to the tribunal can be made if ROC has striked off the name immediately, name inadvertently or from incorrect information. Matlab, ROC removed the name of the company, but that name removal was inadvertent or was removed on the basis of false information, then ROC can suo moto within 3 years may make application to the tribunal for restoration of the name. Matlab, application to be submitted by the ROC to the tribunal within 3 years suo moto. But if company, workmen, members or creditors or debtors, any of them can file application before the expiry of 20 years from the official announcement of removal of such company in the official gazette, can be made by any of these 5 members, 5% to the tribunal, and a tribunal shall send copy of the order to ROC within 30 days from the date of the order. If ROC has strike of the name correctly, matlab inadvertently or incorrect information के case में these provisions will apply, and the name of the company was removed appropriately, then appeal by anybody to tribunal within 3 years from the date of the order. Matlab within 3 years an appeal can be made to such a tribunal with respect to restoration of the name of the company. This was entire about your name or name removal provisions. Now these registered value provisions have not had much of questions coming in, but still for your reference I have made 2 pages summary. I would recommend that you kindly go through your own self and you will be able to easily understand. Here are not much of important provisions out there, but still just go through with this. Now miscellaneous provisions, government company, again a important one. Company in which not less than 51% which is held by the central government, state government, or state government, or fourth point is and includes company which is subsidiary of the government company. Matlab, which company would be called as a government company? A company in which not less than 50% is held by central government or by state government or combined by central government or state government, or the fourth point is means any company which is a holding company, means any company which includes means any company which is subsidiary of the government company. Those companies are to be considered as a government company. For example, if shares held by government company, then not counted for determining government company. As the example of this is A Limited, 20% held by central government, 20% held by state government, and 20% is held by another government company. Then in such a case, A Limited is a government company. So the answer to this question is no, because 20% and 20%, only 40% is held by either central government or state government, and 20% is held by a government company which is not a subsidiary company. Here this point is very relevant here. So therefore, this company is not a government company. In the next point, in case of subsidiary company, government company shareholding is counted for determining whether it is a government company or not. For example, B Limited is there. 20% is held by central government, 20% is held by state government, and 20% of government company, 20% is held by government company, which is A Limited. That means of the 100%, total 100%, 20% by state government, 20% by central government, and 20% by A Limited, which is a government company. Okay. Then that means B Limited is subsidiary of A Limited. Therefore, B Limited is a government company, and A Limited's shareholding would be counted while determining whether B Limited is a government company or not. Now, annual report on government company, where central government is a member of government company, then central government shall cause annual report on working and affairs of the company to be prepared within 3 months of the annual general meeting, and it should be laid before both the houses of parliament. This is what the provisions of government company looks like. Section 447, punishment in case of fraud. Punishment with, in addition to the payment of debt, imprisonment for a period of 6 months to 10 years, and fine. Minimum will be amount involved, and maximum would be 3 times of the amount involved is the fine applicable. Now, if public interest is involved in case of fraud, if fraud is involved and public interest is affected, then in such a case, minimum imprisonment instead of 6 months, it would be 3 years. That means minimum 3 years to 10 years of imprisonment would be there. Now, where amount of fraud involved, here we learned if fraud is committed, then what is the penalty. Now, if amount of fraud is involved is less than 10 lakh or 1% of the turnover, whichever is less, plus no public interest is involved, then imprisonment would be maximum 5 years, or fine would be up to 50 lakh rupees, or both can be involved. So this was the entire revision of your miscellaneous chapter. Do let me know in the comment section how did you like the video. If you like the video, please share it with all your friends. And now, thanks a lot for watching. Thank you so much.